Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Monday, February 7th, 2011. Well, folks, the markets are having a solid day today on extremely, and I repeat, extremely light volume. Right now, the market's again trading on the SPY 58.8 million, and it is again approaching 1 p.m. Eastern Time. We're on pace to do maybe 100 million on the SPY, which would be close to the lightest trading day of the year. Now, again, this has been normal. Mondays are notoriously up days, and again, very light in volume. In fact, it's the lightest trading day of the week, according to the data that we've looked at over the past multi-month session. All right, and again, that's just scanning back multiple months. Mondays are the lightest volume day. Why? Well, today, very, very light, probably because the Super Bowl has something to do with it. You know, people, again, out with their friends, drinking and so forth, a little bit lighter today, and that's added on to the natural light volume day for a Monday. In addition, nothing major overseas over the weekend. There really was nothing new out of Europe. There was nothing new out of Egypt or the Middle East. Therefore, again, people just sitting back and, again, enjoying the market as it floats up today. Right now, we have the Dow up 83 points, NASDAQ up 25, and the S&P 500 up 10, just under 1% today, about 0.8% across the board. And, again, you can see what happened today. The market's gapped higher, pushed up through the level right here. You got above it. You confirmed. That tells you you're going to go mostly higher. And, again, you came all the way up to this 132.40 level, and that's where you've stalled out. Then you started to pull back, and by the way, this pullback accompanied a move up in the dollar, just like this move up accompanied a move down in the dollar. So we are continuing to see that as being the whole reason why the market's going up or down is based off the dollar. So again, dollar goes down, markets go up, as you can see, and then the dollar starts to bounce and it pulls the markets back in a little bit. Now you come down to the 20 moving average right here, 20 moving average sloping up, that works as support, and the markets are floating off of that support level. And again, very easy to understand the market today. It's not brain surgery here today by any stretch. The market's again moving higher on light volume, on positive kind of sentiment out there. Complacency is definitely out there that we have to be watchful of as well, but nonetheless, light volume and a move down in the dollar from the open today, from where the dollar opened, helping the markets continue their rally. All right, let's take a look at the 60-minute chart. The 60-minute chart continues to move up just a little bit here. You have gotten through this trend line, although you still have this one up here to worry about if we continue to slam higher. Right now, you have to assume that the market will hold the gains for the day. The question will be is when volume increases later in this week, do we still continue to see a move up in the markets? And again, this is the Federal Reserve plan. I've talked about it day in, day out till I'm blue in the face. This is what they're doing. This is what they're going to continue to be doing. And the only thing that will derail this, and I repeat, this is the only thing that will derail this, is if you have a major event somewhere else in the world. Egypt was a one-day event that the markets freaked out on a week ago from last Friday, and you saw that. Volume jumped to 300 million. Remember what I said earlier in the video. Volume today, only 100 million is most likely. Now, 2 Fridays ago, not this past Friday, but the Friday before, we had that big drop of about 165 points on the Dow. 300 million traded on the SPY. Think about that. 2 times the volume. All right, not just one more time, 2 times the volume of today traded. When that happens, they can't control it. All right, it cannot be controlled. All right, and again, the dollar rallied because of the fear overseas. People rush to the safety of the dollar. The dollar rallying puts pressure on the markets as well. That was only a one-day event. What it tells you is you need something bigger than that to happen. Otherwise, this market will be neutral to positive going out. All right, going forward, neutral to positive unless you get a bigger catalyst for a multiple-day sell-off. It's amazing because it really is relying now on something major, major thing around the world. Otherwise, you're just not going to see the type of selling that you might expect for a correction. Now, does that mean you're not going to have a down day? Yeah, you'll have a down day of 25 points on the Dow, 50 points on the Dow, maybe 75 points one day. But it doesn't tell me that you're going to have a multiple-day correction of 5-10%. Until you have some sort of event like that. And I know it seems crazy to think that way, but that's the way it is, folks. Right now, you're above on the intraday basis, above the 131.50 level, which was a master level. And again, we'll see if where we close today, but then we have to watch to see if we confirm. Do we confirm above that level afterwards? And that'll be the big challenge that we look for tomorrow. Now, again, that's your just synopsis of today. Volume very light, markets floating neutral to positive. Again, Friday effect was in play on Friday. We floated up. Monday effect is now in play today. The volume should pick up a little bit tomorrow. Economic news is very brief this week. Not a lot going on after the jobs data last week, which was basically thrown under the bus. They said, forget that jobs data. That unemployment report number was a great number. We're going to focus on that. Non-farm payrolls, forget about that 37,000 number. It was only because of snow. Snow, weather. Throw it out. All right, so that's what we've seen here. The market, again, not reacting to that Friday jobs number at all. Now we have to wait a full another month before we get any more indicator. And I'm sure there'll be some, if that's a bad number, I'm sure it'll be like, oh, well, it was because of this factor. That's just the way it is. But again, as traders, you can trade that. And again, that's why you join the research center. That's why you join the chat room at inthemoneystocks.com, to get this stuff, to understand, to make money regardless of what the market's doing. The market's going up, you make money. Guess what? We unloaded the rest of our forward position, which we bought perfectly. If I put up the symbol forward here, guys, take a look at the daily chart of forward. This is where we picked it up last week. We sold half on Friday, Thursday, and then the rest of it today. Take a look at that, guys. Look at that bounce. Perfect entry. And again, if you understand this, you can make money. Doesn't matter if the market's overbought or oversold, or if they're going up or down, there's always a trade to be made. And we were just talking about that in the intraday stock chat today, how the members of the intraday stock chat have been on the cutting edge. You know, a lot of amateurs out there have been shorting. You know, we've taken a small short here, small short there, one or two things out there, very short term, again, or we're taking something just to test the waters, but you're not loading up because you have to understand what the Federal Reserve is doing. The Federal Reserve is doing this, again, it's a game plan by them, and you have to respect it. If you don't respect it, you will lose money. Understand it. And again, join the research center. Take the free trial, folks. It's there for the taking. Okay? So again, in any case, just realize that Ford was a great trade. PSD continues to be a great trade as well. My partner Nick put this one on the hot charts and alerts. Look at the breakout. We nailed it. We had called out an entry right over here, guys. Right over here, and look at the move up. Great trade right there on PST2. Very nice call by my partner, Chief Market Strategist Nick Santiago. All right, in any case, guys, that's what we're seeing here as the market continues to make its move to the upside today. A solid move up on extremely light volume. The dollar, again, as I mentioned, if we go to the dollar, take a look here. The dollar opens up higher and falls. Remember how I told you when the dollar faded, that's when the market got that continued move up. And then the dollar has actually had a small bounce. And remember, the markets have pulled off their highs now. Not very much off their highs, but just a little bit as the dollar's floated up. So you can really see that inverse nature here between two trend lines, by the way. You have the low pivot here and the high pivot line up here. These are two trend lines that the market on the dollar is stuck between. GLD. GLD is hovering basically on the flat line today, nothing doing there. You don't have fear. You don't have really a big move in the dollar. Therefore, without those two catalysts for gold is flat. The USO is hovering on down a little bit today. Very nice sell-off here on oil as well, I have to say. Good sell-off on Friday. It's continuing to sell off here. The reason why is because there was a lot of premium built into oil based on what was going on in Egypt, whether or not the Suez Canal was going to be an issue there. Are they going to close that down? It looks like that is now non-event. So you have a premium coming out of oil right now because of that. And that's why oil the last couple of days, people have said, you know what, this Egyptian thing is not going to really turn into anything big. Let's take our profits and run out of this trade. There's no reason to be long in oil, and oil is coming down because of it. So, again, very key to understand that as well, and that's why you have oil coming down even when the dollar isn't doing much, is because there was a premium built in for the Egyptian situation, and that's now a non-event. Okay? Let's take a look at some small caps, some large caps. What else is going on? Apple Computer is above 350 now. Now, actually, believe it or not, I've been talking about a break of this trend line as being a possibility of a little bit of a top being put in. Apple performing well today. We talked about this in the intraday stock chat today and assumed it would perform well because the iPhone, I believe, is being released in Verizon stores today. So again, that little bit of buzz, that little bit of positive, they're probably getting a lot of sales on their first day out. You have to assume that that's the case, and then the hype is there, and that's why you're having a nice move up in Apple. So Apple, again, taking out those highs, moving a little bit higher. We'll see again how high it goes, but I do think that it's getting in that range of a little bit of an overbought situation. The question is, can they perform without Steve Jobs, the same as they performed with those previous earnings, which were so good? All right. ExxonMobil continues to be a powerhouse today. Take a look, up 62 cents. Look at that chart on the daily. What a chart. Chevron, again, big move up 85 cents. Very similar chart to the ExxonMobil. Okay. Microsoft is having a good day today. Big pop. Notice how Microsoft fell down all the way to the 50 moving average. Now it's popping right off of that. Very nice move there. And again, we can take a look at Google here. Google's up about $7 on the day. That stock, again, after earnings sold off, down to the 50, and now it's kind of coming back up, much the same as many other charts. One chart I highlighted on the blog today, FFIV, guys. This stock had ugly earnings. The stock goes from about 140 to 102. Now it's surging back up. This is going to be shorting one level and shorting two levels gap fill. These will be great levels to short for a short-term gain. Again, we're only talking a 1 or 2 day pullback off each level, although this one probably would be a little bit of a better level for a multi-day, maybe a week-long pullback or so or more. But either way, these are your levels to watch. It's a great trade. I love when stocks get hit on earnings like this and then surge back up, because you will get a short off and a very good profit at the certain levels should they get hit. All right. Amazon is just up fractionally today, up about 95 cents. RIM is basically flat. Intel's up 11 cents. Cisco's up a little bit, but Cisco, again, another great call here, folks. I said, guys, look for a possible pullback off the 200 moving average on the Cisco daily chart, and there it is right there, beginning to pull back off that point. All right, so again, these are the key levels you have to watch for, the key trades you want to watch for. And again, the Research Center includes all. You can take a free trial of it too, test it out. That's what we encourage you to do. Test us out, make some money, and then decide to join for life, as many of our members have. All right, so again, that's what we suggest you doing. Check out the In the Money Stocks Research Center, In the Money Stocks Intraday Stock Chat. Take a free trial, test it out, and join for life. Take care, guys. Have a great afternoon, great evening, and again, I'll be making some money this afternoon. Hope you do too. Take care.